In this edition of RIN TV, leaders give hope to the struggling Eurozone. Bob Stein looks at second quarter financials. Bob Hartwig appears before Congress on Dodd-Frank. And in our follow-up segment, Aviva, Citizens, and Crop Insurance. All this and more. You're watching World Risk and Insurance News on RIN TV. Hello, I'm Marisa Christian, and here's what's happening in the world of insurance. We begin with a look at the economic crisis in the Eurozone. Spain's economy continues to struggle, with unemployment in the second quarter at 24.6%, over 53% among Spanish youths. Analysts fear that Spain could need a bailout similar to Greece, Ireland, and Portugal, putting even more pressure on the Eurozone. But ECB President Mario Draghi suggested that the European Central Bank was ready to intervene.
Within our mandate, the ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough.
All this is the backdrop for second quarter earnings now being reported. Earlier, I spoke with Bob Stein from the NASDAQ market site in New York about the trends he's seeing in the figures from insurance companies. Bob is a regular contributor to RIN TV. He's been advising leaders in the insurance industry for over 40 years at Ernst & Young. Here are highlights of our discussion. Bob, welcome back to the program.
Thank you, Marisa. Nice to be here.
Let's jump right into results. Insurance companies are reporting 6-month earnings. What trends are you seeing?
Well, you're right. We're into the heart of the earnings season for life companies, and early week results indicate the strength of the headwinds the industry is facing. Many analysts are beginning to mark down quarterly estimates, largely driven by reductions in interest rates and equity markets in the second quarter. This puts a significant squeeze on profit margins in most product lines, and I expect that'll be the tale to talk about during the second quarter. If one is looking for a measure of the health of the industry, one might look to the earnings trends, which at flat to down during the last several quarters also would indicate the struggles the industry is having. I think we'll continue to see rates rise in the property casualty area well into 2013, largely driven by CAT experience, the reduced interest rate environment, and still very low returns on invested capital. I think we'll see rates rise going forward, but at a less significant rate than we have been in the recent past.
So what are the factors most likely to affect performance in the coming quarter?
It'll be the trend in interest rates and equity markets that tell the tale for the life companies. Slow, steady rises in interest rates and equity markets will be just what the life industry needs. On the property casualty side, it will again be the catastrophe experience during the summer months and the significant rate increases. But again, the real key here will be getting some of those rate increases down to the bottom line. At the moment, these rate increases, while substantial, don't seem to be improving margins.
If you'd like to see more of Bob's comments on financial performance, visit our on-demand library. In part 2 of my discussion with Bob Stein, we discuss regulations in Europe and the U.S. That's in our next edition of RIN TV. Dr. Robert Hartwig from the Insurance Information Institute was asked to speak before the House Financial Services Subcommittee on Insurance, Housing, and Community Opportunity. The hearing focused on the impact of Dodd-Frank's insurance regulations. Here are excerpts of his testimony.
In 2010, worldwide combined property casualty and life insurance premiums totaled $4.3 trillion, or about 6.9% of global GDP. Collectively, these premiums reflect the transfer of hundreds of trillions of dollars of risk exposure to insurance companies around the world. It's therefore critical that any and all regulations impacting the industry, including Dodd-Frank, not in any way diminish the ability of the insurer to play the key role that it has played for centuries. Now, despite difficult economic times in recent years, the insurance industry's capital resources are at or near all-time record highs and are growing. Unlike banks, we're able to operate normally throughout the entirety of the financial crisis and have continued to do so since. Indeed, not a single traditional property casualty insurer or reinsurer failed as a result of the financial crisis, nor did a single legitimate claim go unpaid. Consequently, the financial industry regulations adopted in the wake of the crisis must avoid imposing bank-centric regulations on the insurance industry, whose operating record and business model are clearly distinct from that of the banking sector.
If you'd like to see Dr. Hartwig's entire testimony before the House, visit our on-demand library. And don't forget to answer our new RIN TV poll. We'd like to know how you feel about the level of regulation in the insurance industry. It only takes a moment. Just click on the poll from the RIN TV homepage. We'll have the results of our poll on a future broadcast. In our follow-up segment, as part of Aviva's announced plans to streamline its business and focus on high-performing markets, the British insurer will offload its stake in a joint venture with Taiwanese life insurer First Financial Holding. Citizens Property Insurance Corporation approved an average rate hike of at least 8.8% beginning next year. Rates could rise by upwards of 10.2% if Florida state regulators account for the risk of a major hurricane striking the state. As the historic drought continues in the U.S., analysts believe government-backed crop insurance, offered through carriers such as ACE and Wells Fargo, could pay insured farmers billions of dollars in claims this year. The U.S. government is likely to be paying even more, given the structure of the program. Well, that's it for now. Don't forget to follow RIN TV on your favorite social media platform and sign up for our free news alerts. I'm Marisa Christian. Join us next time for more world risk and insurance news on RIN TV.